I was the one who was late. They were not. So blame me, not them. I just walked in first. Okay, good morning, everyone. And I apologize for being late. I want to thank the ranking member of the Senate Finance Committee, Senator Wyden, for being here, as well as finance members Stabenow and Cantwell, and a leader on retirement issues, Sheldon Whitehouse, though he is years from retirement himself. Very selfless of him. Tomorrow, House Republicans are expected to unveil the fine print of their long-awaited tax plan. At the risk of using a Halloween pun, we're sure that the Republican tax plan will be full of tricks for the middle class and full of treats for the wealthiest Americans and the biggest corporations. We don't know yet what the Republicans will do to middle-class Americans' 401k retirement accounts, but many Republicans have suggested that they may move the cap on pre-tax contributions to 401ks all the way down to $2,400 per year. It's now $18,000 if you're below 50 and $24,000 if you're above 50 years of age. No matter which way you slice it, what the Republicans plan to do to 401ks is an immediate tax hike on American families' retirement plans, period. Would be bad for millions of families, which is why it's opposed by groups like the AARP. The president suggested that these accounts won't change at all, but then immediately backed off and said it's a negotiation. Maybe that will be included in the bill, and maybe it won't. And the chief tax writer of the Republicans, Congressman Brady, has refused to rule out a middle-class tax on Americans' retirement. We Democrats are here to say that we vigorously oppose any tax hike on middle-class retirement accounts, and that we have a better plan to make it easier for Americans to save for retirement rather than harder. Under the plan we're putting forward today, we would lift the cap on pre-tax contributions for 401ks, create a new tax credit for companies who will match 401k contributions, and create a new auto IRA program for the 1/2 of American workers under age 65 who don't have access to an employer-sponsored retirement plan. We make it easier for Americans to retire in a decent way rather than harder, which is what our Republican colleagues do. Why would they do that? Why would our Republicans do this? Why would they hurt the middle class in something as sacred as retirement? To give a huge tax cut for the top 1% and provide a tax giveaway to corporations that are already raking in billions of profits a year and are flush with capital already. We think Republicans have it exactly backward. They should abandon any plan to tax 401ks and work with Democrats in a bipartisan way to expand retirement savings, not to cut them. Senator Wyden. Oops.
Thank you, Leader, and the Leader has said it very well, and what I want to do is just amplify on a couple of points. The first is the Republicans in Congress have been talking about right at the heart of their tax reform effort is to make the tax system simpler. I can tell you, as I look again at what is on offer, this approach on retirement would be a full employment program for record keepers. In effect, you'd have one set of rules pre-tax, that's $2,400. Another set of rules that would be post-tax. You might have employees setting up both types of accounts. Employers are going to have a challenge trying to get the word out about both of these approaches, so we'll start with that. As the Leader has touched on, we have just been slack-jawed at the idea that they just cannot keep their hands off your 401k. What we have seen is early on, they said, well, we're looking at some of these ideas. Then the president reeled it back in, and then Mr. Brady put it back on the table once more. So you take these things on top of the fact, and and we won't continue the Halloween analogies too much, but they already have.
Come on.
If you've sat next to them all these years, I knew that was coming. But they do have a frightful record when it comes.
Good one, Ron.
Thank you. Thank you, Mr. Leader. When it comes to middle class savings. So here's what has happened already this year. They've made it a lot harder for states like Oregon to help Americans save when they don't have a savings plan at their job. That's what they've done already. Number two, they're in the process of scrapping a rule that says financial advisors to retirement plans have to work in their clients' best interests. Get your arms around that. That is really a radical idea, that the financial advisor should have to actually be working in the client's best interest. That is in the process of being scrapped as well. And now we've got going after 401ks. I mean, the reality is all of this that's going to be so harmful to the middle class is going on behind closed doors. And I want to amplify on the leader's point with respect to why. Essentially, as some of the authors of the Trump tax plan have said, like Mr. Moore, they have overpromised all of their strongest mega wealthy supporters. They've got $4 trillion worth of tax promises. And they basically, at this point, got virtually no revenue in order to pay for it. So what they have done is basically made it clear that their promises to the middle class are really not worth the paper they're written on. There are false promises to the middle class. So you make $4 trillion worth of promises, largely to the people who are at the top of the top, and then you got to come back through the back door in secret and take it out of the hide of the middle class. So it is less simple, less fair, and less hopeful for the middle class who work hard, play by the rules, and would just like to be able to save and get ahead. So I'm glad my colleagues are here, two very valuable members of the Finance Committee, and Senator Whitehouse, who's been prosecuting the cause a long time.
Well, good morning and happy Halloween. This is such an important issue for the families in Michigan, and that's why I'm really glad to be here with my colleagues. It is true, tonight you're going to have a lot of ghosts and ghouls walking around knocking on our door, a lot of scary little kids all dressed up, but none of this is as scary as the Republican tax giveaway plan, and that's for sure. Senator Wyden just outlined how it's going to take away people's options for saving for retirement. That's a problem when only 18% of Americans are very confident that they've saved enough for retirement. And I can tell you in Michigan, where we have both in the public sector and private sector, people's pensions being questioned, people don't know whether or not they're going to get their full pension now. And we have a lot of employers, public and private, that are turning from traditional pensions to requiring people to use 401k savings. And so right now, people deserve a better deal than what is being talked about by the Republicans. That's why we're here with a plan that gives families more ability to save for retirement. More ability to save for retirement, not less. And the power to decide how they're going to do it. So we're really proposing something that will protect the freedom of American families to save for retirement on a pre-tax basis. Today, workers, as has been said in Michigan and across the country, are able to save $18,500 through a 401k. If they're 50 or older, they can save an additional $6,000. That's good, but we think there's a better deal. Democrats would expand the limit so that every American can save up to $24,500. every American can save up to $24,500 in a 401k account on a pre-tax basis. Their plan, can you imagine, their plan would limit the savings to a skimpy $2,400 a year, a budget gimmick that would then be used for tax giveaways for the wealthiest Americans. So we're suggesting $24,500, and what they're talking about is $2,400. Imagine trying to retire on that. That's frightening. Thank you. Senator Cantwell.
Thank you. I'm glad to join my colleagues today to say that the Republican approach to a tax reform bill is wrong-headed. It's wrong-headed on trying to make sure that Americans no longer have deductions of sales tax, mortgage, property tax, and a variety of things. They're also wrong-headed on trying to take away retirement savings. According to the New America Foundation, 92% of Americans are not meeting their retirement savings target. That results in a savings shortfall of roughly $14 trillion. The Economic Policy Institute found that a median working age family had an average of only $5,000 saved for retirement. So the lack of retirement savings will add additional strain to government programs from Social Security to Medicare to SNAP. The 401 plan remains one of the most popular retirement savings for more than 55 million active users. Mainly, it encourages Americans to save for retirement. In 2008, we bailed out the biggest banks while everyone else's 401, pensions, and retirement savings took a hit. And people are still feeling the effects of retirement instability while we gave the banks billions of dollars and now are back to making billions of profits a year. So we owe it to workers to make sure that they can invest and they can save for their future. The Republican plan of taxing 401ks or limiting tax-free contributions will only make it harder for people to save. We should not be taxing working people to pay for tax cuts for huge corporations. The potential cost of paying taxes upfront could reduce the amount of many individuals that are able to contribute to their retirement accounts or would limit their ability to contribute at all. We need to be instead encouraging people to save through incentivizing investments in 401s, annuities, and other retirement products, not cutting taxes for the wealthiest Americans while putting the burden on working families. I'll turn it over to my colleague, Senator Whitehouse.
Thank you. I'll try to wrap up quickly. It's, I think, long past time for a sincere effort in Congress to help Americans' retirement security, and we have ideas like the auto IRA that will, in fact, help Americans' retirement security. About a third have zero retirement set aside other than the prospect of Social Security. What we have in this budget, instead of a sincere effort to help Americans' retirement security, is a sly budgetary trick. It will reduce Americans' retirement options, all to establish a budgetary trick to move revenues into the 10-year budget window. For every dollar they move into the 10-year budget window and count as revenues, you lose revenues in the out years. So on a net basis, there's no foreseeable gain, but it does create phantom revenues, which can be used to offset tax cuts for the rich. So what you're doing is disrupting Americans' retirement security, failing to produce enhancements and improvements that Americans desperately need, and instead reverting to a budgetary trick that will allow for tax cuts for the wealthy. We deserve better, and thank you for listening. All right, we're ready for questions. We're going to take them, at least I'm going to take them on this subject only because I'll be at after our lunch at our usual 2:15 Ohio clock meeting. Yes, sir.
Wouldn't raising the cap to 24,500 only benefit higher income?
Well, it depends how much you want to save, but we're doing other things as well. Our idea of a credit for employers who contribute will benefit low income, too, very much so.
What do you say to Pat Toomey and other Republicans who say that, if all you have to do is increase GDP growth by 4%
Well, first, 0.4% a year, I don't know how many years it takes, but it doesn't pay for the whole package, at least the $5 trillion package that we've seen. We don't know how many offsets they'll put in there like this one. Second, the bottom line is that this theory churned out by right-wing think tanks that growth will occur because of these tax cuts is absurd. And all of our examples, President Bush said this, and the same right-wing think tank said it in 2001, 2003. They predicted a surplus in 10 years. Instead, according to CBO, the deficit was $1.6 trillion greater because of the Bush tax cuts. The state of Kansas, so obvious in what happened. Again, home of the Koch brothers, the great experiment, dramatically cut taxes, and we'll have real growth. They predicted, for instance, that the government income would be up $300 million. It was down $700 million. They predicted that growth would soar. Last year, Kansas grew at 0.2% rather than the 1.6% that all of America grew. So it's utter self-serving bull.
Leader, can I add just
Yeah,
a
go
sentence
ahead.
on
Sure,
that?
Ron.
In support of the leader's point, I can just tell you in the Finance Committee, what we have seen is some of these growth projections that respond to your question are just unicorn math. And you don't have to take my word for it. The Republicans chose economists to come before the Senate Finance Committee, Senator Stabenow and I, just a couple of weeks ago. We asked point blank, would these tax cuts pay for themselves? And not the Democratic economists, but the Republican economists said that. And apropos of the leader's point, when you have the Treasury Secretary saying that they believe they could generate $2 trillion worth of growth, there is no independent evidence to suggest that.
Just to add to that, tomorrow afternoon at 3, our Democratic Policy and Communications Committee is doing a hearing where we will have the House Democratic leader from Kansas and a parent, a PTA leader from Kansas that will be speaking more in depth. I would really encourage you to come and to listen to this, because the fact of the matter is they ended up going down to 4-day school weeks for many of the children in Kansas. It was a complete disaster. The Republican majority actually went back and repealed all the tax cuts. Increased taxes again to try to stabilize things. So it just hasn't worked. I was here during both Bush tax cuts as well. And for me, I think for all of us, we're not ideological. If trickle-down economics worked, great. It has not worked. And so I don't know how many times we're going to see Republicans try to sell a bill of goods to the public when the public has not gotten any benefit from trickling down. So tomorrow, please come join us.
Tell them where it is.
It's in the Visitor Center, so we'll send out something again on it.
Can you talk for a moment? We don't know the specifics about the bill that's going to be released tomorrow. I know that some administration officials talked to House Republicans from New York and New Jersey. As a member from New York, talk about the impact potentially of what this would do to states like
Vast in the 10 Republican districts in New York State, 9 Republican districts in New York State, taxes for the middle class and the upper middle class would go up significantly, even with this compromise. So they shouldn't be fooled. There are about 60 districts throughout the country where over 30% of the taxpayers get an average break of $8,000–9,000. And the idea that the standard deduction would make up for it is, again, a total. I mean, the misstatement of facts is appalling. Yeah, they're doubling the standard deduction. They're also taking away the personal exemption. So if you're a family of 3, it's a wash. If you're a family of more than 3, you lose money on that, too.
You spoke a little bit about the dissonance between the president and Chairman Brady about what's in this bill. To the degree you're interested in negotiating or just knowing what to oppose, who speaks for the Republican Party on their tax plan?
Well, what Donald Trump says about the tax plan and what's in the tax plan are light years apart. What Donald Trump campaigned on, helping the middle class, and what he's supporting are light years apart, because this is a tax plan that goes primarily to the wealthiest of Americans. And so who really speaks for the Republican Party? The Koch brothers and their very rich allies who have wanted to get rid of all income taxes and all federal taxes for a long time.
Can I follow up on that?
Sure.
with the health care bill that was crafted in a similar way, after the House passed it, the president called it mean. Talking about the fact that the president is not, this isn't what the president campaigned on.
I think if the president spent time to read the bill, he would oppose it. But his advisors come in and tell him, oh, this is great, this cuts middle-class taxes, and one of the many problems with this president, he doesn't know actually the actual details of the things he's supporting. He did the same thing on health care. He said the health care plan would lower premiums and cover more people. It did the opposite, and it's the reason it lost. The American people hated it. Now, 30% of Americans now, as low as 30, support the Trump, and they call it the Trump tax reform proposal in the poll, which is the best way to put it, and it's still sinking, 30%, and it's going to get lower. Yes?
Democrats seem to think, the more sunlight, the more you talk about what's
Really in the bill.
The better it is. But this week we've seen things kick off with a renewed attention on the Mueller investigation, these indictments and charges that are being down. Does that make your job harder?
Well, we just keep at it, and the same groups, many of them that were mobilized, letting the same grassroots groups that were mobilized, letting the country know what the real health care bill was, are now focused on taxes. The Mueller investigation is going to proceed along on its own. We hope there's no interference. Obviously, there'd be an outrage if there were. But we're going to be focusing on taxes for the next several weeks. Yes.
Come to the big tax rally tomorrow, too.
Yeah.
Three Senate Democrats didn't sign on to the initial letter laying out the proposals. How hard are you going to be looking against this?
Look, everyone's going to make up his or her own mind, but the three who signed on, if you listen, who didn't sign on, listen to their statements, basically agreed with the principles. Yes.
What about sunset provisions? Is this something that Democrats are going to be pushing for as far as this tax reform package?
Well, we'll have to see the individual package before we could talk about what things should We think the whole plan should sunset in about 3 minutes.
Leader Schumer, have you talked with any Republicans about this proposal, and if so, what was their reaction?
I have not talked about Republicans on the 401ks, but we will. Okay? Last question, and any of my colleagues chime in if I've left something out.
What's your revenue estimate for this alternative retirement?
We don't have a revenue estimate yet. We intend to submit it to CBO. Thank you, everybody. Debbie,
Thanks.
did you want to say something? No?
All set.
Okay.
Thank you.
Thank you, everyone.